All right. What's up, tycoons? What's up, traders? Super excited for today's video. Going to give y'all an update on natural gas. We're going to take a look at the spot price of natural gas first, and then we're going to dive into UNG and finish off with BOIL. So make sure to stay tuned to the end of the video so that way you can see, the analysis on all of them. Some people only trade UNG, some people trade natural gas futures, some people only trade BOIL. We're going to break down all of those. What we're starting off looking at is the natural gas 2020 lows. Right, and you can see that we're testing our previous level here right around 2.43. At the time of this recording, we were at 2.42 and just below that. Now, if you're trading the others, you have to keep in mind the factor of decay. So even if natural gas could be going up a little bit or could be going down a little bit, the price of BOIL and UNG is going to be affected a little bit differently than just the spot price of natural gas or maybe just the price of natural gas futures. All right, I actually have a video coming soon, probably early next week, explaining the different types of decay and the different decay factors, and also some ways that possibly you can help try to negate those factors and some ways to hedge yourself against that decay. So make sure to stay tuned for that video. I know a lot of people have requested that, but yeah, let's jump straight into it, right? So below our 2.43 level, we see we have 2.2. We tested this level right around November of 2020. And before that in 2020, we also came down to a level right around 187. So those are going to be my key areas for the price of natural gas that I'm going to be paying attention to. Now, here we have the chart zoomed out, all right? And this goes back to the very end of 2021. And what we're looking at are going to be some of the key levels that I just showed you guys where we're at. As you can see, we bounced right around that 2.2 area, and we're really fighting that 2.43 as a resistance area right now. There's a lot of lines all over the chart. What these are the RSI and MACD signals. These are some really good indicators that you can use to help start giving yourself an edge in the market. No one strategy is going to be 100% guaranteed, but once you start combining some strategies together, you can really help give yourself an edge in the market. And ultimately, trading is like going to battle, like going to war. You need to have the proper weapons at your disposal, and you need to know how to use those weapons so that way you can give yourself a little bit of an edge. So let me explain what these are real quick. We'll go through it very quickly. As you know, I tend to cover these a lot in a lot of my videos, so some people may already be familiar. But notice these downwards arrows right here. So clearly we have a low and then a lower low, right? If you take a look at your RSI, keep in mind, this is going to measure the relative strength of whatever asset or equity that you're looking at. And we can see that even though we're going lower, making lower lows, we're actually making a low and then a higher low right here on the relative strength index. What this means is we're building relative strength as the price of natural gas is actually dropping. In this case, that's a term known as bullish divergence. It's an indicator you may see some type of bullish activity. Now, you also end up getting a bullish divergence on your MACD right here. So notice how the MACD is also in an uptrend as well. Now, typically, some people do trade the divergences on the MACD, but a lot of people just like to use it for entry and exit signals. And that's going to be this red line either crossing above or crossing below. And so you can see here, we got the bullish divergence. And then what did we do? We dipped right there to that blue line and then crossed back up below or above the blue line there. And so technically that would be a MACD entry signal, right? So we really had about two strategies combined together to give us an edge and a possible indication that we could see some bullish activity, and we did get a nice rally. Now, the opposite of that is going to be a bearish divergence. So take a look how we're making a high now, and then making a higher high as well over here. If you look at your relative strength index, we're actually losing relative strength, making a high and then a lower high. So when the price is going up, making higher highs, and the RSI is going down, making lower highs, this would be a bearish divergence and an indicator you could see some bearish activity. Now you combine that up here with the MACD, the red line crossing below the blue line, and that's a MACD sell signal. So first you get the bearish divergence, and then you end up getting a sell signal right here. Now, again, you have two things helping to give you an edge and understand some of the future price action of, whatever it is you're looking at. And sure enough, we get a downwards move. And we've continued to respect these divergences pretty well. If you take a look, we have a bullish divergence. Okay, we had a low, lower low, we had a low, and then we had a higher low. So we're creating higher lows, building relative strength, building a bullish divergence on the spot price of natural gas, and we've already started bouncing. Now, you can never predict how much a bullish or a bearish divergence is going to cause the underlying to move, whether it's going to be a small 5% move, maybe it's going to be a huge 100% move, but it does help you kind of understand some of the potential different setups. Okay. And same thing here on the MACD. We're starting to trend upwards while we're continuing to make lower lows. We've got a bullish divergence there as well. We did get the MACD crossover here recently. Okay. And if you notice, we are starting to pull upwards. Now we're fighting that 2.43 level I mentioned. Above there, 2.79 and 3.32 are going to be the key areas to watch. Now, if we do continue up to rally, there's an important trend line here that is, as I mentioned, going to be pretty important. And what this is this is the bearish divergence trend line that initially caused some of this drop, right? We're making higher highs over here, going up in price, but the RSI was making a high and then a lower high. We still haven't broken through that bearish divergence trend line, which means that it still could be a valid resistance level. So if the spot price continues to come up and we reject that level, you could see the price of natural gas go back down. If you're bullish on this, you're going to want to continue to see this go up, break through that level, and then ultimately flip it to an area of support rather than resistance if we end up coming back down after breaking out of that level. And if you're bullish, you're going to want to continue to see this MACD curl upwards, and you're going to really want to see it get above 0. All right. Now, the next chart we're looking at, this is going to be UNG and BOIL. Now, we had a bearish signal yesterday on UNG. If you take a look, both of these rallied tremendously, right? BOIL was up about 10% around close, and UNG was up around 5%. But they rallied a lot more than that intraday, and UNG actually gave a bearish signal. So if you take a look at these boxes right here that we have, these are going to be gaps. Okay, so notice how there's a gap in between this candlestick and in between this candlestick. And this is the daily time frame that we see these gaps on. These daily gaps, they fill about 90% of the time historically. The biggest question is when they're going to fill, not always if they're going to fill. So just because we have a gap up to fill doesn't mean we have to fill it anytime soon. It could take weeks, months, or years. And then there's that 10% chance that it may never even actually fill. The charts for UNG and BOIL are scattered with tons of daily gaps to the upside after such, dramatic moves to the downside here recently. But if you take a look, what we did was we actually came up and look at where we filled. We exactly filled half of this gap on UNG. And once I saw that, that's a bearish indicator to me. And, UNG and BOIL are both down today. Now, BOIL did a really good job of filling its first gap, but it didn't come all the way up to the second gap and give a bearish signal. But if you're going to be trading natural gas, it's kind of important, even if you're only interested in trading BOIL or only interested in trading UNG, you kind of want to pay attention to both of them because they're not always going to perform exactly the same. And some of them may give you signals that the others are not. All right. So, I'm not really surprised by the downwards action today. If you take a look, we have the new support levels for UNG. All right. Those are going to be 715. That's our most recent low. If we break below there, we have a target of 667, 641, and 605. Those are going to be the 3 bearish price targets that I have, AKA potential support levels if we end up going down, right? So this is that yesterday candle on UNG, all right? And then we can see it's a little bit red today, starting to pull back a little bit. So we're going to see how things really turn out, how things play out. All right. Again, these are the major support levels for UNG. And I'm going to be seeing if we end up targeting those. Now, we had an ABC structure on UNG that I was tracking and really that I was waiting to start buying at. And so, I did recently just buy back into UNG. Of course, I'm a little bit down on that position, but it's a relatively small position and I'm comfortable with where I'm at and my cost basis. And if I need to add lower, I know some of the key levels that I'm going to be looking to see if we end up finding support, and potentially maybe I'll add at those levels. Now, I'm not telling anyone to buy UNG. I'm not telling anyone to buy BOIL. I'm just being, transparent with you guys. Now, our ABC structure brought us to the 752 price target that I was aiming for. And what this is this is the 1.0 extension of your wave A and wave B. So, we had the 3-wave move that I was looking for. We ended up hitting that and hitting those price targets. And I was waiting to come down to some of those price targets to really start adding to a position there in UNG. Now, similar to the spot price, right? We have the RSI and the MACD signals. I kind of already explained those and went over those. But if you take a look, we have a little bit of a weaker divergence here on UNG. All right. It's not as strong, the bullish divergence. We do have another little bit of a weak divergence here on the MACD as well. And we did get a crossover, but we haven't seen any type of follow through in the price action. Rather, price action has continued to head lower. Now, something I didn't cover in the last slide or the previous ones are the major Fibonacci levels. You use these because nothing moves in a straight line up or a straight line down. Rather, you get a move up, retracement, continuation of the trend, or move down, retracement, continuation of the trend. So some really good examples, we move down, we retrace up to our 61.8 level, continue that trend, right? And then we retrace up to our 50% retracement level and continue that trend. And we've repeated that pattern multiple times. So if we do end up getting a strong rally in UNG, all right, these are going to be the major Fibonacci levels to pay attention to, right? These are going to be an area that you want to use caution on. Definitely protect your trade, because if we come up to here, there's the chance that we could continue the pattern of, trend continuation, and ultimately that move could have been a healthy retracement. All right. So specifically, those are going to be 1615, 1443, and 1270. Those are going to be the three Fibonacci targets. Okay. Now, when it comes to support and resistance levels, all right, I gave the support in a previous slide. For resistance, we're going to be battling 822, 904, 1031, and 1167. Those are going to be some of the key areas and key resistance levels. And above there, we have the chance of hitting those Fibonacci levels. All right. Now, this is, zoomed in just a little bit more. These are those fib retracement levels, okay, along with the support levels down here that I gave you guys. Now, the reason we look at the 61.8 and the 50% and the 38.2 is because these are the three most common and well-respected. There are other retracement levels, but especially if you're new to using the fibs, these three right here specifically are the most common and well-respected. And you can, spot reversals. You can definitely spot reversals by using the fibs as well, not just trend continuation. Now, I recently put out a video I highly recommend you guys watch. It's this is the thumbnail. It's called Top Trading Strategies for Natural Gas. And in that video, I go over a plethora of different strategies that you can use to trade natural gas futures, BOIL, UNG. And it's not just the strategies that we covered in this video. Okay, there's other strategies included in there. There's multiple time frames, right? We go over the 1 hour chart, we go over smaller time frames like a 5-minute chart, we go over bigger time frames like the daily chart. So depending on what your own style is, you can watch that video and really learn something, and maybe find a strategy that, trades according to the way that you like to trade and trades on a time frame that you really like to trade. But if you take a look here, this is going to be BOIL. Okay, so now we're getting into BOIL, and this is a really good example here of a Fibonacci reversal as well as the Fibonacci rejection and continuation of the trend. So we have our swing high up here. We connected down to our swing low. You see we have this sharp move to the downside. All right, we come up and we start to consolidate, right? So you can spot a reversal from a downtrend when you come down, consolidate around those retracement levels, and then break through. That's when you have the potential to make a high and then a higher high, which is what we did. We came down, we started, consolidating around these levels, ultimately broke through and put in a new high and got a reversal there. Okay. Now, shortly afterwards, what we did was we got the Fibonacci rejection and continued the new downtrend that I put in, right? So after we got a reversal and put in a higher high, we started a new downtrend and put in a lower low. So we connect our new swing high up to our new swing low, and we have that move down. We retrace up to the 50% level, and then we continue that trend and put in a low and a new low. So that's kind of just a quick synopsis of how to use the fibs, why I like to use the fibs. Okay, they're pretty important. Very, very useful as well if you learn how to use them. This is going to be the BOIL, Fibs, RSI, and MACD signals plus new support levels. All right. Now, I've been mentioning after we broke this 795 level that the next target down below is going to be 321. So we're not really there yet. I mean, there's a lot of room to drop. on Boyle, but if we do come down to 321 and natural gas continues to fall, I'll definitely be interested and maybe even be considering some positions in Boyle. Now, that doesn't mean it can't go below 321 and that 321 is going to be a bottom. This thing is already making all-time lows. And when things do that, they tend to continue making all-time lows, which is what we've been doing, right? We started making all-time lows over here, and then we just continued doing that. So, eventually a bottom is going to be put in. Nobody knows when and nobody can tell when. All right. But similar to UNG and the spot price charts, okay, we're using some of the same strategies when it comes to the MACD. All right. You can see over here was an entry signal on the MACD. We got that nice move up. We broke through the Fibonacci retracement levels, got that Fib reversal. And then we ended up getting a head and shoulders pattern here. And this head and shoulders was a really nice trade if you went short on Boyle. What we did was we rejected that Fibonacci retracement level. So that's about one strategy. And then we put in a right shoulder here, right? So we have a left shoulder, a head, a right shoulder. That's a second strategy that you can use for a possible short position. And then the third one ultimately was the MACD crossing down below, giving us that exit signal. And since then, it's just been an absolute disaster. There's a reason they call these things the Widowmaker. I definitely see that, and I'm sure a lot of you guys are experiencing some pain, but keep your head up. Any losses, take them as learning lessons. Don't let them demotivate you out of the market, and really, just stay focused on learning and, what your mistakes were and what you could have done to prevent some of those mistakes. All right. So that's going to be it for today's video. Hopefully you enjoyed it. If you did, smash that like button, subscribe to the channel. Actually, real quick, let me go over the Fibonacci targets to the upside for Boyle. Those are going to be 19.12, 2365, and 2810. We haven't really gotten any type of a retracement from this huge downside move from $42. So if we do get some type of retracement, it's very possible we could come up to these levels. But before so, we'd have to break through our prior support levels. Those are going to be now resistance at 795 and 1461. But yeah, so that's the actual end of the video. Appreciate you guys watching. Smash the like button, subscribe to the channel. I'm out.